Let's take another look at this. And a daily chart, the volatility is right in the middle of the range. On a 5-year chart, it's a little bit on the higher end of the range. But on the daily chart, it's right about in the middle. Certainly has been higher. And volatility may increase before we get to earnings. Okay, so we're going to go with Adobe. Basically just checking the chart out here. It looks like it's it's kind of in a trading range. Volatility has been increasing over the last 9 months, but if we take a look at the 60-day chart, we're definitely on the low end of the 60-day chart here, because we've had a few up days, and it looks like prices have moderated and stabilized somewhat. This might be a good entry point, so we're going to go ahead and let's go over to the Analyze tab for a second. I've got this set up already. We're going to buy 10 of the straddles of the of Adobe August 40s. That seems to be the closest to the in the money at 41.21. We have to purchase 300 shares of stock in order to get delta neutral here, and that's fine by me. We're just going to go ahead and enter the order for 300 shares to sell 300 shares of stock after we get filled on our straddle here. We're going to try to enter it in at the mid price just to see if we can get it, and we'll go ahead and enter that. Let's just take one quick look at this. Adobe was 263, now it's 265, so volatility has increased just a little bit, but the implied volatility is very nice at 39. Let's just double check and make sure it's still 39 here. Yep, still 39%. We've got a fairly decent range, so I think it should be a pretty good candidate. Now, if it doesn't move, that's the only danger. If it doesn't move, then then we're going to be, we really need to think about it. Well, let's see if we can get the order in at least at 268. In the meantime, I'm going to bring up CMed here, and see if we can't find a way to do this a little cheaper. If I did go out of the money on these, if I went to the 45, you could do a strangle rather than a straddle. That'd be a little bit cheaper on CMed. Let's see what that would do here. I can always analyze that. Oops, I got both calls and puts here. I want the calls, I want the 40s. I'm sorry, the 45s. Is it the 45s? Let's see. I want the 50s and I want the 45 puts. There we go. So it is a little bit cheaper. That puts us into a relatively neutral delta position right here. I'm not crazy about starting off with a $200 loss on this though. So we could buy some shares. We could buy 60 shares of CMed. Let's go down to 60. And we're back in the middle, but certainly we'd be starting out here with a loss of $200, which I'm not crazy about. That's why I prefer straddles here to begin with. Let's see how we're doing on this one. Looks like it's still working. Let's bring up the order. Now it's at 270. It's already gone up. So we may not get filled here on this. It's already gone up to 270 now. doesn't look like it's going to come back down for some reason. As soon as we put our order in, the mid price jumped up to 270, and so we're 2 cents off, and they're not going to give it to us.